Right, everybody, let's dive a little bit deeper into the topic of ICOs. The topic here, of course, being investing in the post-ICO area. And we have a fantastic panel. I'll introduce the gentlemen real quick. Everybody, hey there. By show of hands, just so I have a rough idea, who of you folks out there have the bright blue tag, so your startups? One? Or is it the lights too bright? Who is it? Okay, there you go. Investors out here? Okay, quite a few. And corporates? All right, interesting. Because, I don't know, if you're in the startup scene, of course, if you're there for a few years, like I have been, I'm a 3-time founder, and I've raised money, raised capital from angels and VCs. And now when I mentor younger founders or first-time founders, sometimes at startup weekends, these kind of events, we talk about their strategy, how they want to raise funding. And more I meet those young kids that go, yeah, look, the idea is this and that, and there's something with the blockchain involved in the pitch. And so funding-wise, we're going to do this ICO, and we think about maybe 10 million, and then in the next 4 or 5 years, we'll develop this. For me, this is completely against what I have learned as a founder, how to build a startup and how to fund it, step by step, de-risking it, taking a little bit of money, proving something, right, taking it to the next step. And now those ICOs are out there. And to some degree, it's tough, I think, to discuss if it is an option to do it, because some founders make it work. They get a lot of money and fund their business. But is it a hype? Is it not? Is it something that's here to stay? Do we even need VCs anymore, now that we can just create our own currency and collect money from it? So those are some of the topics I think we want to discuss today. And I want to encourage every one of you to use Slido. If you haven't used it already today, then definitely hook yourself up, and you can post some questions, and they'll show up here on the screen. So that's also your chance to get your questions posted to our panelists here today. So without further ado, I would say we'll start right into this conversation by me introducing quickly our panelists here. Of course, Carlos, you have just met presenting here before, giving the speech, and he's partner of Seedcamp. And of course, he has led investments into, I think, more than 200 startups, and he's been doing this for quite some time, so he knows how this all went before there were ICOs, or before they were a big thing and really took off and many people raised money, and how it's done now. And we're going to get some perspective from him there. We have over there Jure, Mikuž, who is partner of South Central Ventures, based here in Slovenia, and Jure Fund, who is investing in the region, in the Balkans and beyond. And of course, your background being in this space as well, and you have a focus also helping founders build the business strategy and the deal structuring. That's one of the backgrounds I think that you can contribute to the panel that will be interesting to hear in the times of ICOs, how this all works out for startups. We have over there David Prais, who is chairman of Cofound.it, and of course his focus is really on the ICOs, and he has helped more than 10 crowd sales, launched more than 10 token sales in 2017. So he's really in the thick of it, knowing how these things work, if they can work, how to make them work, and working with startups on getting to that point where they can do an ICO. And of course, we have Philippe Suchet here, who is a Spider Capital partner out of the US, has a background here in Europe as well. And he's also a very experienced founder and investor, who is doing things the way also I learned them they're supposed to work before there were ICOs. Very experienced man who brings in a host of experience there. So maybe let me throw in the first question right at you there with your way of doing investments and looking at startups, right? How they de-risk step by step, how you come in with the right amount of money so they achieve the next milestone. What are your feelings if you meet a founder who goes, yeah, maybe we'll alternatively just do an ICO for several millions, and they are like in the idea stage or very early on? Yeah, how do you feel about that if you meet such a founder who pitches to you and says, yeah, okay, interesting, but maybe we'll go a different route and don't need your money anymore. We just get a few million. You just want to give us a few $100K. Why would we do that?
I mean, first of all, I would wonder, because a lot of the ICOs initially were built for, we're done for people that really needed the service. So if I would say that it has nothing to do with kind of the blockchain and a lot of this, and people are just trying to raise money and they think that a better route is to raise money through an ICO, I would really question this. I personally believe, and it's as I would say, a core thesis, and that's why also I became kind of a VC after being an entrepreneur, is that there is tremendous value being brought by professional investors, in the sense that we really go and do like, deep due diligence, we meet the team, we check the product, we do the reference call and so on and so forth, and then we bring a lot of attention as well to making sure that people are meeting milestones and are being careful about how they spend cash. And I think if you start with an ICO without having gone through this kind of framework, it's problematic, and it's mostly problematic for the investors, because I'd say easy money may not be such a bad thing, except that I think it could lead to the wrong kind of behavior, unfortunately, on the entrepreneur side, and some bad outcome for the potential investors.
Yeah. So I guess it's a new thing, right? We all need to learn how this works, all participants, founders, of course, included. And Jure, I know you are a big believer in that. We need to be sure to educate ourselves about what an ICO is, what it is not as a founder. What are tips you saw yourself having to give to founders more and more this year, last year, founders who got excited about this opportunity of getting free money out there on the blockchain? What is the big things we need to realize when we talk about educating ourselves?
Well, I would say that we were more dealing with the investors in ICOs than the founders who went for ICOs. And I didn't have such a problem, with somebody that would come to me, and even with one of our founders, and say, look, I'll just raise some money through the ICO. Of course, I have my own reservations regarding this as well, but it's more problematic if people on the street ask me, which is the ICO I should invest tomorrow, because I just did 2 yesterday. I just did 5 investments yesterday, and considering that, knowing that most of these retail investors do not have, the basic knowledge about investments in startups, I got pretty scared on that. I must say that, and it took me some time to get over that and to start understanding the market dynamics on the investor side.
So David, maybe can you do a little bit of education for all of us here? I mean, you've been involved in so many ICOs. What's the best practice out there today to do this in a, let's call it, sustainable way that makes sense for both sides, the founders and the investors?
Somehow I feel I'm left on the end, quite rightly. It feels somewhat combative, really. But anyone that actually knows me well knows I have a foot in both camps. So as Carlos knows, I'm actually Deputy Chair of London's Fund of Funds, and we fund very traditional venture, and I'm very involved in that segment and have been for many years. Really why I jumped to the ICO market was really more to do with the concept of crowdfunding than actually almost blockchain. In other words, what we found is a new mechanism of raising capital, but it's not about raising capital just from an average investor. It's actually people that fundamentally should be is in the utility token arena, that should be using the program. So what you're doing is seeding the market with users. Now, we have seen a lot of abuse, and I want to be incredibly clear about this. Many of the businesses are not real businesses, have really no chance of execution. But actually, for example, if I wish to really shake up the insurance industry, there isn't a mechanism of destroying Lloyd's of London through the traditional fundraising mechanisms. Unless my surname was Rothschild, or there's a couple of other families I can mention, there is no mechanism of raising the background capital required to actually interfere in industries that are very entrenched and are quite centralized. And what we're seeing is there's an opportunity truly for the odd unicorn, and let's say odd unicorn rather than everyone's a unicorn, because that would be really lying, to come to fruition by really disrupting some of the very traditional banking, insurance, some of these industries, and taking the entire funding market in a different direction. The problem has been, of course, with the amount of abuse that went on, in many cases, ICOs have got a bad name, which is right in the cases where it's been abused. But we certainly, within Slovenia, we have both sides of this equation, and we have some incredibly good startups that have actually managed to make some significant changes to the industries they're involved with. And we're still really, really early on as well, let me be clear. So the idea that ICOs will take over the world, sorry, I don't agree. The idea that traditional VC and ICOs will, I wouldn't say merge, but will move very close to each other is absolutely right. So we're going to see a bringing together of them, real due diligence done on ICOs prior to them being ICOs. So, what we would call venture quality stuff being put out within the public domain. And we're already starting to see in big numbers the venture capital groups getting involved within the ICO market as well. So we are seeing, I hate using the word merger because I don't think they will fully overlap, but we'll definitely see overlap.
Thank you. And Carlos, maybe a question to you. How do you see these two worlds converging? There's also a question here, does mixed ICO and VC fundraising is something that you think is going to be popular? And also when some funds work with startups, sometimes those that are going towards ICOs help them to get ICO ready. There's a new dynamic, of course, if there is a new type of liquidity event, right? Does that create a new dynamic for VCs that they want to take money off the table already? How do you see those two converging and being compatible or not?
Yeah, no, first of all, I do think they're compatible. So that answers the question outright. But I think that how they're going to be compatible is such a multivariate equation at the moment that it's being hashed out. So it will involve new ideas, like, for example, blended equity / token employee stock option pools. It might involve things like tranched delivery of ICO cash raised. It might involve blended equity investment commitment and token-based commitments. So I think that the innovation behind how these two things will blend is still to be determined, but that the need to is clear to me based upon some of the research that I was doing about the things that an ICO creates problems when you have all this money up front. So, and most investors, I think, today are very well aware that the business model of a traditional VC is disrupted to some extent by an ICO. So those two forces pushing at each other will result in this sort of hybridized approach.
Okay, so let's see. There is, of course, one question. We're here in Slovenia, so maybe we can tackle that as well. Slovenia managed to get a lot of ICO per capita, right? We know that there is a lot of ICO activity here. There are a few other countries where it's such active. And the question there being, which country in the region is best positioned to do that also? Any thoughts on that on the panel?
Again. Slovenia, I mean, we have real Slovenians here. I just fly in once every 2 weeks, but I seem to spend half my life here, which I quite enjoy, I'll be honest. Slovenia is without doubt one of the leading lights globally within the ICO market. If we look at Ljubljana, the percentage of crypto millionaires is higher than any other city in the world. And maybe you guys don't know this. And the interesting thing also is if we look at the age of these crypto millionaires, we find it is remarkably young and probably inappropriately so. Somehow this country, very early on in the crypto world, the students would go out and buy some Bitcoin and they held on to them. Lucky them. So we have a lot of people here with a lot of money that have come from this. In terms of, as the question says, who's positioned next? Obviously, there are a lot of countries that are positioning themselves, and there's a lot of noise out there. And there was a discussion this morning about those within the Mediterranean, Gibraltar and Malta, making a lot of noise about getting themselves crypto-friendly. I'm not going to point to any countries particularly, but some of them are very good at talking and some of them are very good at doing. We have others also closer to us and a bit further north that really have got very heavily into saying they're into crypto, and then you find out actually it's only a very small portion and 3 or 4 or 5 people that make a lot of noise. So I beckon, thankfully we're able to travel and see these things and do, but really as you'll probably hear me say 1,000 times, do your own due diligence, please. Don't go crazy on these things, but there are certainly going to be challenges in terms of implementation due to legislation around both Europe. But Switzerland is probably doing very well at the moment. Others are also they're doing as well. But we will see, I promise, a massive shake-up in the next 12 months.
Cool. Maybe we can take down those top 2 questions and make space for new ones if they are available.
The first one, though, by the way, this mixed one, actually, Carlos and I have disagreements on this. Because I believe if you're going to, unless you have a single owner of equity who will never take out dividends and perceives themselves purely as really being a trust, you will end up with conflict always between token holders and equity holders. If the company makes $100 million in profit, let's say, because we have found ourselves a unicorn, what do? Do they give the $100 million to the equity holders who are VCs and want the $100 million? Do they give it to the token holders who want to see the entire environment strengthened around the tokens? Or do we say, hey, we split it 50-50? And currently that decision sits with management or with the board of directors that may well include some VCs, but generally not token holders. So I think we're going to see a lot of legal action taken by either side. If you give it all to the equity holders, the token holders will sue you. If you give it all to the token holders, the equity holders will sue you. Split down the middle, both sides will sue you. So I actually don't see, other than really, really strict rules being put in at the points of that equity and that the tokens coming in, so everybody knows where they stand. I think otherwise we end up with some real conflict.
Good. And I think one aspect of getting funding from the crowd and crowd investing in ICO being a way of getting money from a lot of people from anywhere in the world is that it potentially can help startups in regions where there's not so much VC or angel money to build their businesses from there, right? I mean, Carlos, you probably know, people coming, making a pilgrimage to London and build their businesses there, and you have people coming in to connect with Seedcamp. There are certain hubs around Europe where it's so much easier to build a business because of the money that's available, and especially early stage funding. Often investors look for investment opportunities more locally than remotely. Are ICOs a new opportunity for startups in more or less remote or under funded regions to build something and not having to move to one of those hubs?
Well, I think your question actually probably needs to be sort of broken down into one part of it is where is the investor group based and the assumptions behind that, and 2, what's the most efficient way to fundraise? So the reason why it's interesting what ICOs are doing is that they're not having to tap into the centralized pools of capital that are based in New York, London, San Francisco. So therefore, you can be in somewhere remote and tap into a global pool of capital, and that doesn't seem to function as well for venture funds because partners seem to be not willing to get on a plane and meet. And that's the promise, right? But at some point, that has to change. And the point that that will change is whenever you realize that as an organization, you're obsolete as a VC if you don't do that. And the ICOs will put pressure on that and will probably create an equality between the 2 types, where the professional investors, whether they be VCs or some hybridized thing, will eventually have to buy into any geography on the basis that that's where the opportunities are coming from. And the ICOs will be also created by people in traditional geographies. And as a consequence, whoever's raising money in ICO will be competing for the money and the opportunities based in California as well as, let's say, in Estonia. So I think those things will get neutralized. Now, the second thing is, this idea that that a founder based in one geography would struggle raising in Western Europe or in San Francisco, and therefore that the only path they have is an ICO. And I think that that's changed radically. Seedcamp has, from the very beginnings, always gone to the geographies. So we've been present in Slovenia, we've been present in Romania. We've come here with people rather than expecting people to come to us. And increasingly funds are doing that. And not only that, with as connected as we are, when a product launches, no matter where it is, if it's global in nature, investors globally pay attention. So I think that is changing as well. It doesn't, Product Hunt will surface a product no matter where the hell it is. It doesn't care. It's just, is it good? And do people love it? And so I think that that's also changing the nature of venture investing, is that some of the companies that know how to connect into the larger marketplace are increasingly finding that they get money thrown at them from all parts of the world, not just locally. But we're not there. We're not fully there yet. I don't want to pretend that that isn't a problem, but that's where I see the two things converging.
I mean, one thing that I've seen a study once, and I think it's generally agreed that if you look at all the venture investing that is done, the whole industry is not performing that well. It's not like a huge success industry, right? If you take all the venture investing, it's just a marginal benefit. Of course, there are a few who have some ways of picking out the winners, but overall, it's not very profitable per se. And in my feeling, sometimes, though, everybody who's jumping on ICOs feels that suddenly now this is almost like free money. It's like much more returns will be out there. But I think, isn't that part of the hype cycle that we believe that? But when the first projects will come down crashing and burning, or we will realize that 2 years in nothing is happening, although they promise to deliver something, will we see that it is going to be a similar picture? And if so, will that scare away some people who are now jumping on the opportunity to invest in ICOs?
I think this is very interesting. I would contrast this potentially with what happened, the beginning of the 2000s when the IPO bubble. I mean, basically the dot-com bubble burst. I mean, we had very strong hope related to internet companies, and unfortunately that led to a significant amount of greediness where people were investing in companies that made no sense and companies public that should have never been public in the first place. But everybody didn't want to miss the train, so even if you didn't get onto the first train, you would get onto the next one. And that led to a significant winter in a way. But the interesting part is we still emerge from it. And I think the same thing is going to happen here, where I think there will be some kind of winter, and hopefully that will clean a lot of the things that need to be cleaned, and from there will emerge tremendous opportunities on the ICO front. The thing, though, that I would say is that if a market is overly dependent on ICOs, then there is a risk that that market would be at risk. Because if we go into winter and there is only one source of funding that is through ICOs, and then suddenly something bad happens, then people will be like, you know what? I'm done with ICOs. I'm done with Slovenia, by the way, because this is all about ICOs. And then the market will enter the winter for a while. So I think it's healthy for a market to have a diversified source of funding, whether it's debt, venture capital, accelerator, all those guys, including ICOs, and then try to find a balance where the different players, as you said, would see value in this versus a very focused kind of approach, especially with companies that unfortunately are startups, i.e. a lot of them are not profitable. So they do overly depend on cash infusion to be able to remain alive. It's not like big companies that will say, look, I can't do an ICO anymore, I'll do something else, but it's okay, I have a business that generates profit. So that would be kind of answer to your point.
Very good. I'm also looping in another question. How much are traditional investors switching to crypto? And maybe for the two gentlemen in the middle, also Jure, are you switching over? Do you have to develop? Are you scared that you'll be out of business soon? How much do you need to turn crypto to survive the next 10 years?
No, we're not switching to crypto yet. But we are, I mean, definitely we are looking at things. I mean, we don't want to, to just ignore the crypto thing, even one of our portfolio companies is now going to this direction, but we are not so much into crypto at this moment. But what I wanted to say on the previous point was that, what I saw here was a huge so-called FOMO, effect here. Fear of missing out, So it was not that something is a good investment opportunity. It was a fear, among the investors, not investors, but ordinary retail investors, non-educated investors, that they will miss out something, that they will stay behind, because everybody is talking about this. Everybody is making huge returns. They see new cars on the street. They see new, people were really afraid of being, left behind. So that's why they just bought everything that was on the market, and that's something that needs to calm down, to cool down. The winter needs to come, and after some time, after clearing some, let's say, even frauds and maybe some companies that were not performing according to the white papers and so on, I think it will be time for a new renaissance on this market.
So if I can add to that, so the question is, how much are traditional investors switching to crypto, ICO investors? And that question is actually probably condensing a lot of topics into one. So I'm going to take one of those topics that it's condensing. The issue of the structure of investment. So I think sometimes when people talk about ICOs, they're talking about this idea of like betting on crypto for the sake of making money off of crypto changes in pricing. I'm not talking about that. I don't think investors that are typical early stage technology investors get permission from their investors to trade FX. So put that aside for a second. What we're talking about here is more about the difference between a convertible note, a equity round, an ASA, and all these different structures, and now this new structure called a token, and the benefits of that structure versus other structures. And getting your head around the idea of, well, what are the benefits and the drawbacks of this structure as an investor? So as I mentioned earlier during my talk, like, Seedcamp got permission to invest in tokens. And it was not an easy task because we had to convince our LPs that we weren't going to be investing in becoming FX traders. We weren't going to be investing in one altcoin to sell it, or that we were going to hold Bitcoin, have it float, and then buy altcoin and sell it, because then it moves away from our strategy, which is to back early stage technology companies that are going to grow. So where does that leave us? Well, it leaves us that there's going to be companies, I believe, in the next 3, 4, 5 years that are going to create tokens that are useful in some capacity for the community to be able to trade in an equity-like structure. And in a similar fashion as holding traditional shares, I will be perfectly comfortable in switching my investments into that structure as I am switching from equity to convertibles. But I am also talking about a situation that isn't that common at the moment. And we're conflating all these other types of ICOs, everything from the scam, quick money raise, to the, a utility token that has no equity equivalent value, or even debt-like structures. So it's important to sort of break all these things up. And then in one narrow band, I agree with that statement.
Just to add, I think, here it's an interesting situation because right now, first of all, you don't really know what you get from an ICO. I mean, most cases you don't get any ownership, like to your point about the 50, which in itself is problematic because honestly, you're investing massive amount of cash, you're taking massive amount of risk, especially early on, and you're not getting any access to an ownership structure. But besides that, you're really going blindly there. And we've all seen situations where it's like, this is a joke, it's a scam, it's impossible. And then you look at the numbers like, wow, that's a scam that's pretty successful. The problem with investors getting in, or people with some insights, it's like as if you go and you're going to play poker and you have a bunch of cash and you think you're going to be successful, but then across from the table, there are a bunch of guys that you don't know and that are really good at poker. What's going to happen? You'll end up broke. And right now, I feel like there are a lot of guys that are, maybe because of greediness, going into this ICO stuff, and they're really going blindly. And when you have like hedge funds that are, potentially doing, pre-sale and then dumping, pumping up all this stuff, on both sides, by the way, that could be on the side of the entrepreneur as well as on the side of the investors. We're not talking about like VCs. VCs are not in the business to do this stuff. But there are people that are pretty good with finance that are in the business of making money, and they don't really care. They don't have all of this structure. They're not talking about, oh, we backed Facebook initially and we're so happy with the success. No. We deliver returns to our investors regardless of how we do it. And so if there is like a field like ICOs where you can make a ton of money with a lot of people that don't really know what they are getting into but are driven by greediness with very little insights, I think it's a game that I would be personally very worried about. And so from my standpoint, when you look at traditional investors, what are we talking about? The guys that are pure financial actors that just want returns, or the players that are trying to build the next Google? And I think the players that want to build the next Google and really have a significant impact on technology and, in general and companies, those guys will play in a very fair manner. Others, could be questionable.
David, to wrap up this session maybe, because you work so much with startups, help them build to the next level, and in some parts help them to make their ICO. Take us a little bit into the future. What do you see the scene to look like when it turns into a sustainable thing that works? What are we looking at in the next 2-3 years?
So let's just talk 5 years. I believe every single thing that we now call equity will be tokenized within 5 years. All stock markets, it's the most logical thing to tokenize. The immutability, the record keeping, absolutely perfect for tokenization. So this thing with what is tokens and what is equity, we will have not really equity, we will have tokens. Now what we'll have is something we actually used to have in the 70s, which is if you owned a certain number of shares in a company, you'd get a discount off the product of the company. I don't know how many of you remember those days, but they did exist, where by being a shareholder you had additional rights. This is actually what tokenized equity is about. The fact that it's not a simple traditional structure that just gives you one right. You have a right to some profits in the company, or you don't actually have the right. If the management deem it sensible to vote to give it to you, then they can. As we know, in most tech companies, they reinvest their profits rather than doing it. So I see a merger in a sense of actually tokens and equity in that sense, and we will move towards equity being issued on the blockchain. Okay, but that is very different from an ICO as you guys are talking about it right now. I think we will absolutely see a slam down by governments on scam ICOs, and I'm all for it, by the way. I mean, anyone that knows me knows I've been working on the side of getting regulation into this industry from the minute I entered it. I do believe what it does do is assist both venture capital and consumers in being able to invest in new instruments that actually have additional powers than straight equity, and as such really can bring more value both to the owner and also to the company. And that's really one of the reasons I got excited by this. It wasn't about, can I go and raise 200 million on a white paper? I mean, I truly don't think that's the right thing to do. So you won't have ever seen Cofound.it really do anything other than say to people, what money do you need to do this business model? What is actually required? And we've evaluated 721, and we've raised money for 10. So there's something there that if anyone in the VC world looks at, would realize actually possibly we're not doing a horrific job. We are actually getting rid of the junk, and trust me, there is a lot of junk out there. Should we just say, it isn't 711 that we just did 10. It is actually a smaller number than that, but the others for all sorts of reasons. And as we're seeing legislation change, we will start to see a more rational marketplace take part. And this is always what happens when we bring in new technologies. There's the hype, there's the sell-off, and then the curve that looks like that, all of us have seen it, and who knows where we are on that cycle. I have my perspective on it, but we will start to see that really happen. And none of us are on opposite sides in that sense. We're all actually working together to make a rational market.
Thank you for that outlook and that closing statement. Thank you so much. Folks, that's a wrap for this session. A warm round of applause for the gentleman, please.